We're now going to shift gears, literally, and talk about another counter, a counter that was, in double digits at the start of the pandemic. It has turned out to be a multi-bagger, and how. We're talking about CG Power and Mr. Natarajan Srinivasan, the managing director of the company, now joining us on the channel. As you can see, this year itself, it's been about an 11% increase, but at the start of the pandemic, this is a stock that was in double digits. Good morning. Thank you so much for joining us here. When we talk about CG Power, already talked about how it's performed in the stock markets, but it's a classic turnaround story, and that's why the big thumbs up from the stock markets, right? So as you have been doing the turnaround, can we say now that all the legacy issues are behind? What is your new focus, new targets that has been laid out?
So now, after having turned around the company, the balance sheet is clean. Now we are looking at growth. As you know, we have three businesses. One is motors. Second is railways. Both we report of one segment as industrial segment. Second is the power systems, where we manufacture transformers, switchgear, and other related products. All the three businesses have got multiple levers of growth. Motors have got several opportunities to grow. Railways, for example, railways have announced huge capex, and if we can participate on the project, railways can be a big growth. Similarly, on the power side, significant investments are going into the power industry due to the shift to renewables and several other projects getting kicked off. So we are now trying to see how we can grow all the businesses. In my view, all the businesses have got opportunities to grow in double digits. It can be 12%, 15%, 18%, depending upon what happens in that year. So the next 3 years, actually, we will focus on growing the existing businesses.
So, Mr. Srinivasan, you are sounding fairly positive, talking about double-digit growth across verticals. So is it fair to assume that from the 5,500 crore revenue run rate in FY22, you are expected to double it to 10,000 crores in the next 3 to 4 years?
So while we don't give any guidance as such, but if the level of growth which I am talking is achieved, definitely the turnover can reach the numbers what you are indicating over 4 to 5 years.
Okay, so 10,000 crores over the next 4 to 5 years. But let's talk about your mainstay, which is the motors business for you. How's the demand on the ground, and how are you planning to scale back the market share loss? Because at the start of the year, we had seen some bit of sentiment impact on the entire sector given the macro headwinds.
So one is the industry demand. Second is what is the demand, what is the market share for CG. CG actually lost a bit of market share in all the businesses when it was in difficulties. Post our taking over, we took several steps to improve the operations. It also coincided with the surge in demand. If you take motors, the domestic demand has been good because all the user industries, be it chemical, or paper, or cement, or infrastructure, all of them are firing. And the industry is expected to grow by about 8%, 7 to 8% per annum for the next 3 to 5 years. When the industry growth is about 7 to 8%, we can comfortably grow by about in double digits, or at least about 12 to 15% we are targeting to grow. Therefore, the demand for the motor business is quite strong. This is only domestic demand. Then if you have capacity, then there are also opportunities for export. And third is actually the EV segment, which is coming, which is growing. The next couple of years will throw big opportunities if you can position yourself to supply motors to the electric vehicles. We are working on this. Therefore, these 3 or 4 opportunities will take the motors. We'll see that motors can grow double digit for the next several years.
So you know what? Let's talk a little more then about your EV plans. Yeah, you made it very clear. Turnaround is done, legacy issues are taken care of, new targets are in place, double-digit growth is being targeted. You've now talked about EV, so let's talk more about that. When we talk about your parent tube investments, we know there's a capex of about 1,000 crore rupees. We still don't know what CG Power's outlay is going to be. Can you share that with us? India Inc. is calling it the Mahakumbh of capex here.
So we have not informed anything because the stage has not come to inform. So we are actually focusing ourselves as a manufacturer and supplier of motor and the relative controller. Every EV will require a motor and a controller. We are talking to a number of people. A lot of development work is going on. Since we understand the motor business well, we have been manufacturing motors for decades. So we want to position ourselves as a credible manufacturer and supplier of motor for the EV segment. And the EV, actually, when there is a motor, there also has to be a controller. We don't have the in-house capability to develop the controller. Therefore, we are now talking to some people as to how to equip ourselves with this capability. This is actually a sort of a 2 years time frame. Various development work is going on. Once we reach a certain stage, then at that point of time, we may be able to share more details. As far as the capex is concerned, see, the existing motor facility can be manufactured with little bit of can be used for manufacture of EV with little bit of modification. We are taking care in our current capital expenditure program, normal capital expenditure program, which we have announced for this year. But once we have clarity, and then once we are able to assess much more details, we may even look at setting up a separate facility.
Okay, Mr. Srinivasan, since we have talked about the top line, let's move focus to margins now. Your margins, of course, have seen a very sharp improvement to double digit now. But going forward, can they head to the 15 to 16 mark, or you're comfortable within this 11 to 13% range when it comes to margins?
So I think it will be a little difficult for us to exactly commit some number. So all our businesses have a large material content. About 70% of the cost of production manufacture is actually relatable to materials. We know what has happened into the material prices. Even now, while we are seeing some kind of softening of material prices, yet there is a lot of volatility. For example, copper prices went down, then again it came back. So prices, stability in these prices will have to come back first. Now, secondly, we also import the electric steel plus copper, which are actually a substantial material which we consume in our manufacture. While prices have come down, the rupee has actually depreciated because of the exchange rate from dollar. When we were paying at 75, now we have to pay at 80. Therefore, there are some negatives, some positives. Therefore, the material cost, stability in material prices will play a significant role in margins, number one.
I also wanted to talk to you about one intriguing thing that I noticed in your con call transcript, and that is about the fact that you're looking to go back to the consumer products business. Talk to us about the rationale here. What kind of scalability do you envisage for that space, and what would be the product profile? Would it be the brown goods, or you're looking at a full appliance range now?
So there is an interest to be in that business. Many of the people who work in the consumer business are still in this company. Post demerger of the consumer electrical business, there was a time period within which we cannot do this business. That period has lapsed. Now we are free to do the business. So last year we commenced this, made our entry into this business just with the launching of some fans, pedestal fans and ceiling fans. There are plans to introduce some other products like a geyser, etc., over this year and next year. This is, of course, these are early stages. So we will definitely build a portfolio of products from time to time. Over a period of 5 years, at least, we may be able to come to some decent level of growth. So there is a lot of familiarity in this business, and some of the dealers, which are our current dealers, they also take care of these requirements. So CG has got a name, and we had, going by the experience of what we faced in the launch of fan, I think it was well received in the market. It has got a very good reception from the consumers.
Now, what is, of course, very clear is that you're sounding very bullish. The cash flow situation is very robust. You're targeting double-digit growth across all the three main businesses as well. You've been rewarded by the stock markets. CG Power was around 9 rupees when the pandemic started, 200 plus. Now, with cash flows being robust, will you reward shareholders? Can we expect dividend payouts?
So one thing, this is a price-sensitive information. As you know, dividend can be declared, can be considered only by the board. So based on 31/3/2023 profitability numbers, then carry forward losses. We have some carry forward losses which have to be closed, etc. Based on that, the board will take a call. But generally, the company is a part of Murugappa Group where, there is an established dividend track record. If there are profits, then certain amount of profits will be distributed by way of dividend. There's a dividend policy across the group which will be followed. So this will be decided by the board at the appropriate point of time. But if the numbers, if everything is favorable, definitely, the board will consider going by the group policy.
Okay, Mr. Srinivasan, we'll let you go on that note, but a classic turnaround story at play when it comes to CG Power.